Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the balanced breakout that started yesterday afternoon, and ES found responsive sellers ahead of the 1969 resistance, and at this point, the market is simply balancing heading into the open. On the larger time frame, we know that this is a balanced breakout attempt. The other markets are still relatively weaker compared to the S&P. And as those markets run into some larger time frame resistance, and ES is also approaching larger time frame resistance, we can get responsive sellers active in the market. So even though the buyers are in control on the smaller time frames here, given yesterday's breakout and the overnight session, we have to understand that ES is beginning to approach larger time frame resistance, and that can attract sellers on first test, and we can get some pretty decent rotations and possibly even a intraday failure if the market's hitting a extreme and a very key zone. So on the upside, we have resistance at 70 quarter to 72 quarter, and the only time it would make sense to really be active on the short side is if we're seeing signs supporting the idea of a failed breakout attempt from the overnight session. Beyond that, we start running into larger time frame resistance at 77 to 79, 80, 75 to 82, 75, and then we have stronger areas of resistance at 89.5 to 92 and 95 to 98. Now, most likely, ES is not going to head up to 89.5 to 92. That would be a range extreme. But in the event that we see continuation and continued broad market strength and sustained upside momentum, the 70 quarter, 72 quarter is an area that has potential to get tested, and the 77 to 79 and 80, 75 to 82, 75, that entire area has potential to get tested, and the sell side can be aggressive at 77 to 79 and 80, 75 to 82, 75. So those are going to be hurdles on the way up in the event that the market continues to break out to higher prices. On the downside, we have pre-market support 57, 58, followed by initial support at 48 to 50 half, and we can still get buying at support on the way down. 57 to 58 is really based purely on the overnight session, so it's an area that calls for caution. 48 to 50 half is active support, but keep in mind that as the market heads down there, the bullishness that we've seen in the overnight session would really start to become neutralized as we go into 48 to 50 half. So even at that zone, even though we can get responsive buyers active on first test of it, it still calls for caution, because if the market does start failing here and going down into initial support, then there's not a whole lot stopping it from testing the actual breakout area from yesterday at 43.75 and 37 to 40. And those are spots where it's very high probability for buyers to defend, especially 37 to 40. So off the open, we're going to be watching to see whether the markets are failing to take out their overnight high, whether they're failing here at pre-market resistance or initial resistance. And if they do put in a pretty strong rejection and failure, then it would open the door to expand the range on the downside and test 48 to 50 half and possibly 43.75 and 37 to 40. And from there, the market can begin to balance again in a range, and buyers can be active. So in the event that we do get a failure and a pullback to 37 to 40, that's a spot where buy side can defend, because it is a very key area in order for this balanced breakout to remain intact. That 37 to 40 really has to hold, and ideally even 43.75, but 37 to 40 is really the key area. So you can see the challenges of a session like today, where the market is set to open quite a ways above value, and we're near some bigger resistance areas. And then it's also Friday, we're heading into the weekend. There could be some profit taking as the market tests the larger time frame resistance, but that's the context that we're in today. So be selective. Be careful on a day like today, because there can be some choppiness in the market here as the buyers and sellers kind of battle it out at these resistance zones. And then on the downside, we don't really have decent support until 48 to 50 half and 37.40, and that means you have to be cautious even on the downside, because if you're buying any pullbacks here, you need to be very clear about your objective and your target. And if there's not enough reward to risk justifying a long setup, then don't get on board simply because of the fear of missing out or just wanting to be involved in this rally here. If that means no trades, then that should be perfectly okay. You want to be selective and only put on high quality trades. And going into the day, our bias is actually neutral. Even though the buyers are in control and dominant, the short-term directional bias is neutral because of this market testing and being very close to larger time frame resistance. It opens the door for sell side to step in and the market to balance in a range. So for that reason, we do have to be careful on both sides, long and short, because the market's kind of processing this breakout, but it's testing some decent areas of resistance, as we saw here in the overnight session. Sell side was active at 68.75 ahead of that 69 level, and we ended up getting a rotation all the way back down to 57. So a pretty strong response off that 69. And as we test even higher levels of resistance and stronger resistance, we can get an even better response. And right now on the larger time frames, the question is whether this breakout is going to stick. So today, being Friday and being the context that we're in, makes a lot of sense to be careful, cautious, and selective. Those are main ideas heading into the open. Let's see how the market reacts here to pre-market resistance, the overnight high, and pre-market support. That'll help us figure out kind of if buyers are continuing to be dominant. Again, keep an eye on the underlying momentum. The NYC tick can be a very good signal today. So let's just see if the buyers continue to be active here at these higher prices, and we'll take it from there.